Should you invest in ARK ETFs since it has risen nearly 600% over the past 5 years? Hi, this is Cayden from VIA Value Investing Academy. In my previous video, I spoke about who is Cathie Wood and what are her ARK ETFs. By the end of this video, I will share with you what factors you should consider before investing in ARK ETFs. Factor 1. What kind of investors are you? In chapter 4 to 7 of The Intelligent Investor, written by Professor Benjamin Graham, he said that there are two kinds of investors. A. Passive investor. They are those who do not like to monitor stocks and do not like to be affected by the movement of stock prices. If you belong to this category, then ETFs are more suitable for you versus selecting individual stocks. B. Active investor. These are people who prefer to select individual companies as they expect higher returns than ETFs. Factor number 2. How will the addition of this ETF affect your overall portfolio? Let's say you already have substantial percentage of Tesla in your existing portfolio and you are considering ARK Innovation ETF. But you will have to know that inside this ETF, Tesla is the #1 holding with a weightage of 10.44% as of 17th of March 2021. Do you want to add more Tesla to your existing portfolio? That's one question you have to answer. Factor number 3. What is the holding and weightings of the ETFs? Do note that before you show hand your hard-earned money into anything, you need to know something about what you're investing, because one of the key reasons why most people lose money is because they have no idea what they have invested in. Let's use ARK Innovation ETF as an illustration. Let's see what are its holdings and the corresponding weightage. The top 3 holdings are: number 1, Tesla at 10.44%, number 2, Square Incorporated A shares at 6.52%, 3, Teladoc Health at 5.86%. So what's next? We need to look at the fundamental performance of the company. Peter Lynch has once said, if the companies do well, their stocks will do well. Let's look at some key metrics of Tesla as an example. Number 1, earnings per share without non-recurring items. If you look carefully at this diagram, Tesla has not been making money until financial year 2020 and the most recent quarters. Number 2 is net margin. If you look at this diagram, Tesla also has no margins until year 2020, where its net margin was only 2.19%. This means that for every $100 of sales or revenue, the profit is a mere $2.90 versus 5.25% in General Motors. 3. Cash flow from operation. If you look carefully at the cash flow from operation, it was mostly bleeding cash until financial year 2018 to 2020. This is a stark contrast if you compare the numbers with General Motors, where most of the cash flow are positive. If we quickly look at the earnings per share of Square Inc., it only has profits for the last 2 years, and for Teladoc Health, its earnings per share was worst in year 2020 as compared to all other years. In short, if you look at the top holdings of Cathie Wood's ARK ETF, you will have an idea the kind of companies that she's looking at and whether it fits your appetite. Factor number 4, how long has these ARK ETFs been around? When I look at their website, it states that the inception date was 31st October 2014, right after the global financial crisis in 2008 and 2009, when the overall market was bullish. When Donald Trump became president on the 20th of January 2017, the market was even more bullish. So there is a luck component that ARK ETFs were doing well. Factor number 5, expense ratio. How does Cathie Wood makes money? We must understand that fund managers make money from the management fees, which is also called the expense ratio. This also means that the larger the assets under management, or AUM, the more money the fund managers make out of you. So the trick is for the fund manager to be good in selling some sexy futuristic companies so that the more people jump in to buy the stocks, the price will go up by itself and it will become a self-fulfilling prophecy. ARK Innovation ETF right now has an expense ratio of 0.75%. With an asset under management of US $17.68 billion, Cathie will collect US $132.6 million for just this ETF alone. This means that she makes money from the management fee and not because it's from investing in the ETF she has created herself. As Robert Kiyosaki would say, the trick to make money is by using other people's money. In summary, there are 5 key factors you need to consider if you wish to invest in ARK ETFs or any other ETFs. Number 1, what kind of investors are you? If you are a passive investor, ETFs will be more suitable for you. Number 2, how will the addition of this ETF affect your overall portfolio? Number 3, what is the holding and weightings of these ETFs? And how are the performance of these companies inside the ETFs? Number 4, how long has these ARK ETFs been around? I would prefer an ETF with a longer track record. Number 5, expense ratio. The lower the expense ratio, the better it is for the investor. My conclusion is, if you want exposure to a wide basket of the fastest growing companies on the cutting edge of technology, ARK ETFs make perfect sense. Cathie Wood has become such a powerful marketer that she reminded me of Steve Jobs' reality distortion field. The moment she starts buying something causes a herd effect, just like Elon Musk's Twitter effect. As other people rush in, the stock price rises and the people will jump in to invest, creating a virtuous cycle, making her richer than ever. But be careful. ARK ETF may not survive the next crisis because most of the companies she has invested has not made money yet or just started to show profits. So will I invest in ARK ETF? The answer is no. But that does not mean that I'm right or others are wrong. It's just that I'm old school and I prefer ETFs or companies that already have track record of making profits and will continue to make more and more profit. So how about you? Will you invest in ARK ETFs? Please feel free to comment on this video and remember to like this video and subscribe to our VIA channel. And I shall see you soon. Goodbye. Hi, this is Cayden from VIA Value Investing Academy. Now, thanks for joining another evening session of our deep dive series. And for this evening, we're going to talk about AI. But before we start, maybe I just need my colleagues' help to put up my screen. To make sure that you can hear me clearly, is it okay you just type 1 if you are able to hear me and then you are able to see my slides? Yeah, just type 1 in the chat so that I know that everything is fine, right? Yeah, so while you are typing, I just want to let you know that the video that you've just watched, it was recorded and published about maybe about 1 year plus ago. Yeah, so if you look at the slide over here, you can see, right, where I circled about 1 year plus ago. Unfortunately, it aged well because at the end of the video, will I invest in ARK? So my answer is no. My answer is no. Partly because I think a huge chunk of their companies that's listed in whatever ETF are not doing very well. But there's one company that did well as compared to 1 year in the past, which is Tesla, right? Now, so if you are very interested in the detail about Wendy, YouTube, goodbye, but session still on, yeah? Yes, it's on. You're watching this live. By the way, the person that's talking to you is not AI, right? AI, in the beginning, is a recorded one, but this one is real. You see my hair, right? Okay, this one is real. Now, so if you look at the slide over here, you can see we have done all these videos some time ago, right? So, for example, 2 years ago. Now, 2 years ago means 2023 minus 2 is 2021. Now, we must take note that in 2021, everybody who buys stocks, they are stock market genius. And in fact, if I could travel back in time in 2021, I have no idea who is Cathie Wood, but there was a very famous YouTuber, right, who say, you must listen to her, let's buy some innovative and then disruptive companies. So I was thinking, who this Cathie Wood? That's when I, together with my colleagues, we shot this video. That was 2 years ago. Yeah. I'm very keen, right, in trying to share more details in using as much facts as possible. So the first video that I did about 2+ years ago, during the bullish market, right, is introduced who is Cathie Wood. Yeah. Then the second video that I did is to warn people, right, to be very careful about her ARK ETFs, because there's a lot of hype. And then remember, in 2021, everybody's a genius. Then, of course, the third one, right, I also explained, should you consider. But in summary, if I could travel back in time, right, I have highlighted some of the companies in Cathie Wood's ARK ETF. She has quite a number. And then I would say a substantial amount of companies that makes up an ETF are actually losing money. Whether in the future will they make money, I'm absolutely not sure. I mean, at least based on the video that I've done in the past. But the way she says she like to use things like, very disruptive, very innovative. She come up with a fanciful name about, for ETFs and so on. So make it very sexy, right? And the most recent ETF that she has created, maybe one year plus, 2 years ago, is called Space ETF. And the funny thing is, when she created this Space ETF, I went to go and check, right, what are the components of this Space ETF? Guess what? One of the company inside this Space ETF is called Netflix. So I'm just thinking, okay, Netflix and then space, maybe the astronaut go to space, they watch Netflix. Yeah, so I find it very hard to reconcile. Yeah, but my thinking is, at that point in time, even until today, I'm not really interested in the ARK ETF. Yeah, and if given a choice, I think I would prefer a low-cost S&P 500 index fund. Yeah. So, but anyway, if you're very interested in ARK ETF, Cathie Wood, you don't want to spend time do research, right? Just to let you know, you just need to visit our YouTube channel at youtube.com/Value Investing Academy. Yeah, we have all the stuff there, including our research on Cathie Wood and her ARK ETFs. And of course, I'm going to pause here for a couple of seconds. You can see there's a QR code over here. Yeah, if you want to keep yourself updated with the latest news, relevant information about stocks, right, you just need to use your phone, scan, the message will pop up, right, and then you just press subscribe. Yeah, press subscribe. Yeah, so right now it's live, Wendy, live, right? So this fella over here is not AI, not recorded one. Okay, good. 5 seconds, quickly, scan. Yeah, the number of subscribers for our channel still have huge rooms. Yeah, we're trying to beat our competitors. Okay, ready? Scan ready? Okay, done. Yeah, so of course, tonight's session will be about AI, and then for the past many YouTube live session, we have been talking about AI as well. Yeah, so now the question for tonight, and the deep dive question, right, is, will AI be the next big thing as predicted by Cathie Wood? Which is why in the very beginning we talked about Cathie Wood. Yeah, so I'm going to hand over my airtime, right, to Hillary, and Hillary is going to go deep dive into details answering this question and see whether are there some AI companies that you can explore. Yeah, so over to Hillary.
Hi, good evening everyone. This is Hillary here. So welcome back to our another session of Deep Dive series, and tonight we will explore that will AI be the next big thing as predicted by Cathie Wood. So without further ado, let's jump in, and we'll do a quick disclaimer for this. So the session is solely to illustrate the application of value investing methodologies and also various valuation methods in the context of real-life companies. And under no circumstances does any of the information provided in the case study represent a recommendation to buy, sell, or hold any stocks, as we do not take into account of the individual characteristics, profile, or the risk appetite of a given investor. So in no event shall VIA or any author be liable to any viewers, guests, or third party for any damages of any kind arising of the use of any content shared here. So neither Mind Kinesis Investment or VIA nor the authors, which is me, of the case study are operated or affiliated with any broker, dealer, or licensed financial advisor. So with that all done, so we'll immediately jump into find out about this AI and also the ARK ETF by Cathie Wood. Okay, so the first question is that why is Cathie Wood bullish on AI in the first place? So from this article that was being released like 1 week ago, Cathie Wood actually says that the AI will power the most massive productivity increase in history, which is what she says that it's going to be astounding and shocking, and it can increase the productivity to 4-fold by 2030, which is quite impressive at what she said. So with that, we decided to further find out about this. But before that, let's have a quick recap of who is Cathie Wood. So she's an American investor and also the founder of this ARKK Investment Management LLC, where this fund management company, they actually focus on innovative and disruptive technologies. So here are some of the sectors that she's involved in, like genomics and healthcare, robotics, and as such. So this is the short glimpse of the ETF that is available in ARKK Investment Management Company. So you can see there are all 8 of them, but tonight we will only focus on this ARKK Innovation ETF. So what is this ARKK Innovation ETF? It is actually defined as a disruptive innovation, which means that they develop new products or services, technological improvements, and also advancement in scientific research in these 4 main areas. So this is the rough introduction of what really ARKK Invest is, but later we will deep dive further into this ETF. So this is just a basic, brief introduction of this ETF. So now the question arises is that since she says that she invests in disruptive technologies, so which AI company would invest in? So here in this article, which is quite recently, about a week ago, they said that Cathie Wood is actually doubling down to invest in this hidden gem AI stock, which is actually a cancer detection company. So it's kind of a bit weird that because when you mention AI, it's usually linked to technologies, softwares, or maybe some IT-related stuff, but now it's a cancer detection company as if it's in healthcare. So how does AI can be applied in a healthcare company? So what company is this? Which is one of the companies that we will explore in tonight's session. So in the first place, we have to address is what is really AI? Because AI has become a common word, is that A and I, but what is AI? Okay, so right now, other than discovering what is AI, we will also look at the work productivity that can be applied by AI. Okay, so now let's look at the future work trend. So for this book that's being published in 2014, the author Jacob Morgan has actually explored that how will we work in the future. So here he listed out 5 trends that may shape the future of the work, which you see is new behaviors, technologies, millennial workforce, mobility, and globalization. But tonight, we will only look into the technologies to see how can technologies actually help us to work better. So another chart that further illustrates the future of the work, like who is going to do the work, how or when is the work going to be done. But tonight, we are much more interested on how the work is being done. So you can see that there's 3 types, like robotics, like having robots to help us, automation to help us to do the mundane, repetitive jobs, but of course AI. And the other 2, robotics and automation, is very clear-cut, is that we know we can visualize like how this can be helped to help us in our work productivity. But AI, how does AI can help in various sectors or industries? So we will find out more. And the first question is, what is really AI? So here, this diagram actually illustrates quite nicely that what is really AI. AI is kind of like to allow the computer to reason as humans, because in the past, like 80s or 90s, it is being programmed. That means it is quite rule-based. You only tell them what to do, then they will do it. They cannot reason like a human. But with AI, they can say that based on what you have input and also the data that I have, this is what I can reason out. And the next subset is machine learning, which right now, they don't have to be programmed. That means you feed them with the data, then based on what they have, they try to learn, capture the patterns about it. And finally, the much more in-depth about is a deep learning. That means they can try to adapt themselves based on the new data, which is much more advanced compared to the other 2. So now let's further look into what is the subfield of AI. So you can see that from here, there's listed out about 7 of them. So we have seen that actually machine learning is one of the subfield of AI, followed by natural language processing, NLP. And this is the best example that I can give is actually ChatGPT. So you can see that you just put in those key prompt keywords, and then they'll do the translation, information extraction, and as such. And the next is speech. And for expert system, when I first saw that, it's kind of like a bit quite hard to imagine. So I further dive into it and then found out it's actually knowledge-based. So based on the knowledge base that they have, they can provide certain information or maybe advice. So this is what expert system is, followed by planning, scheduling, which is quite automative and also repetitive task, and robotics, which is robots, and finally vision. That means allows the robots or the machines to have vision as image or machine vision as such. So these are the subfields of AI. So right now you have a better idea to understand that what really AI is. Okay, so right now here's the question that we have to address is that how can AI actually help to increase our productivity? Because you can see that this person, he has to do so many things, but we normal human beings, we only have 24 hours. How are we going to do all of the things? It's unlikely that we use all 24 hours to work and cannot sleep. So with AI, it can actually help us with this work productivity. So here are the lists that I listed out so that you have a better idea that how AI can actually help to increase our work productivity. Okay, so right now, we know that AI can help us to increase and enhance our work productivity. So which field will actually benefit from AI? So earlier for the past few sessions, we have explored about education, finance, healthcare, and also retail. So you can see that previously there's a human try to provide all these services, but right now we can easily use AI or machines to help us to speed up the process, and we just use the data that they provided to further enhance our work. So this is one of the ways that AI can actually help us to do our work. But other than that, there are also other fields that can benefit from AI. So for me, quite interesting is in agriculture, in manufacturing, and also finally in transportation. So you can see that last time, like for example, in agriculture, usually we will have to have a person to monitor and then based on experience. But right now with AI, they can just feed in the data like how is the soil, and then from AI, they based on the data, they analyze it, and then they generate the result for the human beings. So this can actually help out, especially for the newbies, to take on the role to analyze the soil health. This is an example on how AI can actually help us. Okay, so right now, let's find out what is really ARK ETF is. Okay, so ARK ETF is actually an actively managed ETF, which means that the person who is managing this fund, they will pick and choose the companies to decide whether should they include into this ETF. As such, there will be a fee charged onto it. So for ETF, it's known as expense ratio. So for expense ratio, in short, it means that for every $1,000 that is invested over a year, the person will need to pay a fee of about $750. So even though you think that I just need to pay $750 within a year and they help me to invest $1,000, it sounds quite good, but later Cayden will actually share a much better deal on how you can better invest your money. And right now, we earlier has established that ARK Innovation ETF is actually investing in disruptive innovation companies, and they are actually having 28 companies as of 14 Feb 2023, where they are involved in 20 technologies. So here are the latest top 10 holdings company that is available. So earlier on in the previous video, we saw that Tesla was the first one, but then I think Cathie Wood actually cut her position, and then right now it's on the third place and followed by Zoom Video Communications. So let's further find out what is the technology breakdown within this ETF. So here at first glance, you will see that, wow, 20 technologies, it's a lot, and it's also like jumbled up together. So we decided to categorize them as best as we can. So the first one is AI. So here at first glance, I can see that these four are actually directly involved in AI, which takes up about 14% of the whole ETF. Then another thing, quite interestingly, she also invests quite heavily in genomics and healthcare, which takes up about almost a quarter of the ETF. And finally, when you look through the other categories, it's quite hard to categorize them. So I put it as other applications for the other categories. And we will further see that the first and the largest category, that is cloud computing, which also takes up about a quarter of the whole ETF. So right now, the question is, what really is cloud computing? So here, the diagram actually better illustrates on what is cloud computing. So you can see that last time when we store data into our computer and when we go outside, if we wanted to get something from our computer, we have to come back to our office or our house to get the data. But right now we have Google Drive or maybe OneDrive where we can store the data onto the cloud. And whenever we need the data, we don't have to go back home to open up our computer and access the data. We can easily access it from any devices. So this is what cloud computing is. And some of the companies that offer this for enterprises are such as Amazon, Google Cloud, and also Microsoft Azure. As these are some of the benefits that they offer for cloud computing. And I'll list out one of them, which is cost effectiveness. Like for example, when you store a lot of data into it, they might have duplication of the data. And when you store the data actually takes space and storages. So in a way that your storage will become quite big. And in order to cater for more storages, you need to pay a certain fee so that you can store up more data. Like for example, Google Drive allows you to store up to 15 gigs of data. But if you exceed that, you need to buy more storages. But imagine that with AI, they can determine that which data are duplicate, so they can tell you that these are duplication. Do you want to delete it so they can save storage? So this is an example of how AI can help to enhance cost effectiveness. And now let's look at the historical performance of ARK. So we see that since pandemic started in 2020, and a lot of people stayed at home, they cannot go anywhere, and that is where all those tech companies, they actually are going on through a bull run. So you can see that the blue line is actually the ARK ETF, and the yellow line is actually S&P 500. So we can see that it actually accelerated throughout this period of time. But then starting from 2021, we see there's a slightly downtrend, but it's still higher than S&P 500. Until recently, since last year, we noticed that actually it is below the S&P 500. So as such, is ARK still a good ETF to invest in? This we'll need to further find out more. Okay, so right now, let's find out. For tonight, we'll be sharing about 3 AI companies in the ARK ETF so that you have a better idea that how does AI can be applied in these companies, and maybe you can find some other relevant companies that is similar to this. First one is Exact Sciences. So you can see on the right side here, these are actually some of the categories that what is this company about. So when you first glance, it's like, hey, this is healthcare. So how can AI help with healthcare? Actually, why I listed out this company is because at the start, Cathie Wood is actually doubling down in this stock. So what is so special about this? This is something that we will find out tonight. And next up will be this UiPath, another company. So this company mainly will be focusing on workflow automation. And next, UI Technologies. So you can see that there's metaverse, gaming, virtual reality, and also some other technology stuff. So this is another company we will also be exploring for tonight. Okay, so right now, let's deep dive into AI companies. So first up, Exact Sciences. So this is the company that actually develop and also sell diagnostic tests for early detection and cancer prevention. So what are the products and services that they actually offer is screening. That means sometimes when we do healthcare, they wanted to ask us whether do you want to do screening for any cancer-related diseases. This is what screening is. And precision oncology test is actually genomic profiling. So that means they will take up the genomic data and then they will determine that what are the actionable results that the patient can take in order to overcome or to treat their cancer diseases. So this is the 2 services that is being offered by the company. So here are some of the products that they offered. So for example, Cologuard is actually biomarker to detect colorectal cancer, which is a type of screening services. And then the next one will be precision oncology. So you can see that these are different types of analysis on precision oncology. And right now we'll look at the revenue that the company generates. So we can see that almost 68% comes from screening, then 29% comes from precision oncology. Because right now human beings, they want to live longer, they want to live healthier. So they wanted to have a detection to determine that whether is there any cancer, potential cancer that might be inside their body. So maybe people might be more interested to do more screening. So this might explain one of the reasons why screening generates most of the revenue for the company. And right now, we'll find out that how does AI can actually apply it into their products and services. So the first thing is medical imaging, where the AI will help to analyze these medical images, as you can see on the screen here, to help them to detect and also to diagnose cancer. Because last time, doctors will have to go through a lot of data and also a lot of medical images to help the patients to find out like what's wrong with their body, and then from there, then they try to diagnose. But with AI, they can easily cut down the time to detect all this. And then the next up will be data analytics. So data analytics is a type of function where the AI will analyze a lot of data, a large data set, to identify the patterns and also develop a predictive model like the genetic data that I explained earlier. And then next will be drug discovery. It's also another way that they analyze a lot of data. So you can see that in the healthcare field, there's a lot of data they need to go through to find out the patterns. So with AI, they can help them to cut short this time and also help them to be much more effective to make a decision, which comes up to here, clinical decision support. So they can analyze the past data and also their medical history so that they can recommend an appropriate screening and treatment for the patients. Okay, all in all, this is a company. So we know that how they generate their revenue, what are the products and services that they're offered, but how are their financials? This is the thing that we are more interested about. So as usual, we will look at 4 of the financial metrics, which is the revenue. And revenue is to determine that how much sales can the company generate. And usually, we will look through a 10-year period to determine the trend. So the trend that we wanted to see is a positive and consistent uptrend. And next is earnings per share. So earnings per share here, this is the mathematical formula of earnings per share. And in short, it means that for every one share that the investor purchased, how much of the earnings or net income can the company generate? So we also wanted to look through a 10-year, estimated 10-year trend, which is a positive and consistent uptrend. And next, we'll look at the cash flow. So the cash flow here, we look at operating cash flow, which is the cash flow that's generated from the normal business activities. So here, there's 2 types. When it's positive, that means there's cash coming in from their businesses. And when it's negative, it means that the company is actually bleeding money to keep the operations going. So again, we also wanted to see in the positive, consistent uptrend. And finally, we wanted to look through how are their debt situation for the company. Because even though the company can earn a lot of money and keep a lot of money inside the company, but the debt is like a hole in the pocket. If the hole in the pocket is very huge, no matter how much money you can store inside the pocket, it will drop away from the hole. So here, we will look at debt to equity ratio, which we will check on the long-term debt situation. And based on value investing methodology, we wanted to see that it's less than 0.5 for this ratio. So with all the financial metrics done, let's go through the numbers. Okay, so the first thing for revenue, we see that, it's been increasing, which is a very good thing that we wanted to see. Next is EPS. So the EPS, you can see that, there's a drop, but there's another thing you need to take note that it's actually below 0, which means that the company is actually losing money at the moment. And you can see the trend is actually going downwards. And next, we will look at their operating cash flow. So here is the 0 line. Anything below the red line is losing money. That means the company is bleeding money. But above the red line is actually the company is earning money. So here we see that most of the years is actually below 0. Only 1 year in 2020 is above 0, is actually profitable. So actually here, the trend is look a bit like a gentle downtrend at the moment. And finally, we'll look at the debt to equity ratio. So based on value investing methodology, we wanted to see that it's less than 0.5, but here it's more than 0.5. So if it's below 0.5, that means the company is in a good debt situation. But if it's higher than the 0.5, that means the company is actually high in debt, which is something we should take note of. So even though Exact Sciences is a very good company that they try to help people to have a better health, but currently their financial situation will need to work harder to improve. Okay, next we will look at UiPath. So what is UiPath? So UiPath is actually a software company that makes robotic process automation, RPA software. So at first, guys, it's like, what is robotic process automation? I know automation, but why robotic process? So it actually helps to automate repetitive tasks and also streamline workflows. So in short, it is actually a software robots that do repetitive and rule-based tasks. So here are the 6 common functions of RPA, as you can see here, such as internal system interface, extract data, system interface to autoface, as such. So that means that anything that needs to keep on repetitively doing and also take a lot of human hour that do high volume and also repetitive tasks, this can actually automated by the software, which saves up a lot of time and also manpower. So here is the revenue for 2021, where they generated about 607.6 million. So you can see that they actually have 3 sources of revenue generating for their company. First one is licenses, subscription services, and also professional services. So what do they actually really mean? So for licenses, it's actually, they has a time limit to use the software. So for example, they purchase the software for about half a year, so they can access to this software for half a year. But subscription services is that it's ongoing basis until the moment that you cancel the subscription. And for professional services, it's like per service basis. That means I only want to have this service for the moment. So they only charge for that particular services. Okay, right now let's explore the AI application in their products and services. The first one is intelligent automation. So another thing is that I know what is automation, but why intelligent? So you can see that when you combine RPA, automation, and also artificial intelligence, it's in the middle of here, which means that all of those repetitive tasks to be done by the software, robots, and plus the artificial intelligence, where they can try to determine that whether is this task suitable to do or not. This is where intelligent automation comes in. And next is NLP. So for here, NLP, it actually allows the robots to understand and also respond to human languages. It's an upgrade from rule-based. So imagine that every time you have to key in what you wanted to do, it's also still human power. But when you put in like NLP, so they can try to understand that, oh, what you're trying to do, then I can try to do accordingly and maybe enhance the further workflow. An example will be like chatbots. And next is image recognition, where they can recognize and also interpret the visual data as shown in the diagram below. So the place that can be used for this is such as inventory recognition, because they can easily scan through the inventory within the shortest time, and also document processing. And finally is machine learning. So they can actually analyze the data, identify the patterns, and also optimize the workflows to further enhance and improve the efficiency and also automation of the task. So these are some of the AI application is being used in UiPath. And now the numbers. So for revenue, this company has just recently public listed in 2020. So we only have a 3 years data. But in short, we can see that it's a straight line up, which is something we love to see. However, the EPS currently is below 0. And also we see that the trend at the moment is still at a downtrend. And next, the operating cash flow. So you can see that it's still under the water. Even though recently it looks like there's an increment, but still it's still under the water. And finally, the debt to equity ratio is 0.03, which is a plus for now. But because this is still a young company, further investigation is still required. Okay, so finally, the last company that we will explore for tonight is Unity Technologies. So what is this company? It's also another software platform development company where they create interactive real-time 3D content. So these are the industries that will be using 3D content like in games, architecture, automotive, and also firm. So these are the revenue source that they generate from. So create solution is very straightforward, which means that they actually people use their software to create all these 3D content, 3D images. But for growth solutions, I try to find out more on what growth solution is. And actually they mentioned, I can give an example, it's like they have a product that they offer is Unity Ads, where they offer tools, analytics for advertisers to create in-app advertisements. So that means within their products, they can create an in-app advertisement for the users to click onto it. So whenever the users click onto it, they are able to monetize the advertisement. And here, Unity, they will take a share of that revenue from them. So that means as if that they provide these tools and analytics to the publishers or developers so that they also can take a share of it. And an example is such as the in-game apps. So when people playing mobile games, sometimes they want to go over to another level. They might need to buy something inside the game to advance. So this is where the in-app advertisement comes in, and if they wanted to get the item, they will click onto the advertisement and they will get the item and they will be charged on it. So the revenue that comes in for the developer of the game, they will get the revenue, but here Unity may take a share of it. So this is what growth solution is really about. Okay, so right now let's look at the AI applications. So first thing is definitely game development. So with AI, they are able to create much more realistic game where the character inside the game, they can interact with the players as if they are talking to another real person. And right next will be personalization. So it actually allows to personalize the content creation based on preferences and behaviors of the users. Like for example, they can recommend a game content or adjust the difficulty level of the game based on the player's skill level. And finally, is in VR, virtual reality or augmented reality. So VR actually uses the technology to create a virtual and immersive 3D experience. So like the picture shows that you put on the goggles and then as if you're in a virtual world. But for augmented reality is that you use your devices and then overlay your digital, and the digital images will be overlaid on the real world. And the example that I can give is like Pokemon Go. So you just put the phone onto your room and then you'll be able to see Pokemon inside your phone. Okay, now let's look at the numbers. So the revenue. So this company also public listed since 2019. So we only have about 5 years of data. So it's also another young company. So the revenue is in an uptrend, consistent uptrend. However, their EPS is also under the water and also on a downtrend. And their cash flow situation is also something similar to UiPath, where only one of the year is positive, but most of the year is negative. And finally, the debt to equity ratio, we can see that there was a huge jump from 2020 to 2021. So this is something that investors should really take note, even though the company looks very attractive and interesting. Okay, so all in all, to conclude for tonight's session, so in ARK, it really invests in very innovative and disruptive technologies, as we have seen that how AI can actually help in the work productivity and where it can change or improve the work productivity. However, they need to take note of the ethical use of the technologies, especially in privacy, bias, and also transparency. So all in all, this is my sharing for tonight, and I hope that you have enjoyed the session and learned more on what is really AI about. So with that, I'll pass back the session to Cayden, and thank you everyone.
Hi, ladies and gentlemen, welcome back. So I'm going to start based on the last slide that Hillary has presented, and she shared one conclusion slide about this ARK ETF. Now remember, under Cathie Wood's management, there are a number of different type of ARK ETFs, right? So she has talked about the innovative ARK ETF. So that's one of the 8 or many ETFs that she talked about. Now remember, right, before I carry on, I just want to let you know that we have to be very careful when we hear people describe something that like a breakthrough, disruptive, innovative, very sexy, right? And by human nature, we always want to be part of this. I'm not very sure about you, but I think I should be old enough to understand this because when the .com, right, started in year 2000 to 2001, everybody talks about .com. But of course, they don't use words like, oh, disruptive, but they do use the word .com. So what I witnessed when I was much younger, right, is as long as any company has a website, and then your company is, for example, VIA.com, and then you try to convince the fund managers that, oh, you got this, you want to do this in future. You just need to create a big dream out of thin air, right? So interestingly, a lot of VCs, venture capitalists, they will pump in money to all these .com companies. But of course, at the end of the day, there is no a profitable business model. There's no proper revenue model. Eventually, it was just a hype, and then the .com bubble burst. So you realize that over time, history repeats itself. But humans have very short-term memory. They totally forgotten about this. So right now, instead of using .com, which already died, right? Right now, people use, okay, AI, disruptive, innovative. Now remember, right, if you make $10 on investing in Sheng Siong stock, which is a very traditional business, right? And then you make $10 investing in something very complicated, which is very hard to understand, machine learning, NLP, whatever, right? The two $10 smells the same. So avoid falling into the trap just because you want to be part of something that's sexy. And, for the past 2-3 years, people go and buy cryptos and all that. So right now it's a crypto winter. For those people who bought crypto, I think they should be losing money. So be very careful. Now remember, right? All roads lead to Rome. All money are created equal, whether you make this money, right, through Sheng Siong, very traditional business, or even soy sauce business, or through AI. Yeah, so don't have to follow the crowd. Now, so let's come back to here. Today's session will be permanently recorded via the YouTube, and will be listed in our website, or rather our YouTube channel, which is youtube.com/Value Investing Academy. Now, you can always share this YouTube video, this recording with any of our friends. But of course, to be notified, you just need to scan this QR code over here, use your phone, and then you'll be notified. Yeah. Now, so let's, just now Hillary talked about one ETF. So I'm just going to take a few steps back and show you how her website look like, so that you know where to look for it. Now, you can always Google, right, ARK ETF, Cathie Wood. You end up with this website. So you can see, this is the company that Cathie Wood has founded. So ARK Invest. And you can always scroll through, So if you scroll through, you can see so many funds. And for Hillary has zoomed into this ARK Innovation ETF. The ticker symbol is ARKK, and she highlighted 3 companies. Now remember, if you look at the 3 companies that she described, just the qualitative description sounds wow, very sexy. If you sit down, have a cup of coffee with your friend asks you, what have you invested? You just need to blow their mind, right, by telling them something that they don't understand. Yeah, then wow, because they don't understand, wow, what are you doing? Wow, mind-blowing. Okay, But remember, at the end of the day, the 3 companies have not made money yet. When they will make money, we are not sure. So right now, these are the ETF. You can always go to a website and then look through all this. And nice. And the Hillary has also explained what is the expense ratio. But of course, later on, I'm going to spend more time talking about this. But the interesting thing is when I take a few steps back, and I look at the returns of this ARK ETF since inception. That means since the day that they were founded, they were created. And then I look at their annualized performance. That means every single year, what's their average annualized performance. And I found a few, right, that maybe deserve some credit. Okay, so the first one is what Hillary described, which is the ARK Innovation ETF, which is over here. Now, I use 10% as a benchmark. So you just hit this 10%. Now, bearing in mind that the expense ratio is 0.75, and I'm going to do a quick recap. So maybe we should look at it, because the 3 companies don't make it. But if you look at the overall fund, maybe they can make it, but the 3 companies don't make it. Now, then the next one is this ARK Next Generation Internet ETF. Just the words alone is so exciting, right? Versus what have you invested? I invested in a waste management company. So you look at ROI, 14.36. Maybe this is something that you can consider, right? Now, bearing in mind the expense ratio is 0.88. Okay, Then another one I realized is also more than 10, which is this ARK Autonomous Tech and Robotics ETF. All these words are really, really nice, really, really fanciful. Okay, so expense ratio 0.75. So at the end of the day, Cathie Wood can say whatever, but you must understand that she's a fund manager. Yep. So in other words, she need to say a lot of things so that eventually you give your fund from your pocket, you pass it to her. Yeah. Whether you make money or not, that's a separate story. But the moment your money goes from your pocket to her, she take a cut. Yeah, because you're leaving your money with her, right? She's managing the fund for you. You have to pay her, right? Yeah, pay her. So remember, the larger the amount of money that she manages, the richer she will become. Now, whether will you be rich or not, that's a separate story. But she has to be rich first. Okay. So let's look at the formula for expense ratio. Quick recap, right? So you see, expense ratio is the management fee. Okay, the on top numerator, right, divided by the total investment in the fund. So of course, we want this expense ratio to be low, right? When this is low, means that the management fee is low. But what is high and what is low? So hang on there first, So here there's a qualitative description, right? That means if the fund has an expense ratio of 0.75, so Hillary has said every 1,000, right, invested, you have to pay the fella 750. Yeah, but remember, right, I put $1,000, the fella takes 7.5, you find it's fair. But in the investment world, it doesn't work that way. In the investment world, right, for every 1,000 you pay $7.50 is considered quite high. Yep. Now, and I do a comparison, right? So, for example, if you put your money with Vanguard, under Vanguard got many funds. So, there's one fund that's pertaining to S&P 500, and the ticker symbol is it's not ARK, right? It's VOO. Now, do you notice that expense ratio is 0.03? Now, 0.03 versus 0.75. Yeah, so what does it mean? Now, to make life easier, maybe I change it to 0.60. Yeah, so this is actually 20 times more expensive than 0.03. Yeah, 20 times, will you want to pay 20 times more? So you don't want, right? So remember, in order for us to invest in whatever ETF, whatever you call it, number one, you want an expense ratio to be on the low side. So 0.03 is on the low side. 0.75 is on the high side. So this is it, because you're paying the fella, right? Then the second thing is, you may argue, if the fund is performing well, if I pay 0.75, there shouldn't be any issue, which is true. So right now, we need to look at two things. Okay, assuming that you pay quite a substantial amount of money, right, to the fund manager, are you getting your money back? So what we're going to do is we're going to make a comparison between ARK's fund, right? We're going to talk about the top 3 funds versus the S&P 500, which is have a much lower expense ratio. So the first one, this graph is actually shown by Hillary, but it's okay. So if you look at this line, right, what does the blue line? Blue line is a Vanguard. Now, so do you realize that the blue line is always above the yellow line? Yellow is the ARK, ARK ETF, right? ARKK, right? Yeah, so you see, from this point to this point, S&P 500 outperformed. Yeah, and then during this period over here, this is everybody's a genius, right? Everybody's genius. Or everybody toss in money, wow, like nobody business, right? Yeah. And then after that, what happened? The bear market came. This is the bear market. Yeah. So when the bear market came, the reality sank in. Yeah. The reason is because most of the companies do not make money. So do you realize that the share price right now underperform? So if you look at the performance, if you have put your money, right? Let's say you only got fixed sum of money. You put the S&P 500, the return will be about 265% versus ARK ETF 94%. Now remember, you're paying more here. Expense ratio 0.75, and then here is only 0.03. So now the question is, why would you put your money in ARK ETF, right? Yeah, when they make lesser money for you as compared to S&P 500, even though it sounds sexy. Yeah, it doesn't make sense. So this is the reality. So be very careful if you watch any YouTube, including ours, and then, this is so sexy, this is not nice, and then you sell house and then put your money in. So be very careful, So based on this slide, the ARK Innovation ETF underperformed S&P 500 in the long run. So that's one. So let's look at the second one. The second one is ARK Next Generation. Whoa, very sexy, right? So if you look at the line again, you see, the blue line is on top. So S&P 500 is doing much better than her ARK ETF. Yeah. So here is about the same. Right? So this is the part where everybody's a genius, right? Yeah, genius. So bear market came. Can you see underperform? So if you look at, again, right, the performance, 265% versus 153. And remember, expense ratio is 0.03, which is much cheaper than 0.8. Well, this is quite high. Yeah, so I think Cathie Wood really makes a lot of money. So which is why, do you realize that Cathie Wood always come out and talk a lot about funds, disruptive and so on. So I think if we compare the amount of things that she say versus Warren Buffett, I think Warren Buffett talk lesser. And by the way, Warren Buffett don't really make money out of a management fee because there is no fund that he manages. He only owns his own company, a holding company called Berkshire. Yeah. Oh, by the way, Berkshire's annualized gain I think since 1965 until 2022, it's about 19+%, coming to 20. Yeah, in the long run, I think it performs better than ARK ETF, which has a much shorter history. And then you don't really pay any management fee. Yep, so let's look at the third one. Third one is this ARK autonomous, right? ETF. Same thing, expense ratio so many times higher than Vanguard S&P 500. So can you see here? Oh, until here, can you see the gap is so huge, right? Which means that S&P 500 for the past many years outperformed this ARK autonomous ETF. And then here, right, genius. Yeah, genius, huh? And then can you see bear market comes. So overall, again, S&P 500 beats her fund, right? And then it's much cheaper. So at this point, what's the conclusion? The conclusion is number one, yeah, fact number one is her funds, her top 3 funds underperform S&P 500. And then the irony is you have to pay her more, yes, compared to Vanguard. So you pay her more for underperforming. Wow, it's quite hard to reconcile, huh? Yeah. So before I carry on, I think if I could turn back time, this again on hindsight, right? But Warren Buffett always like to advise people and say, oh, if you want to invest, you're not very sure what to do, you don't like to do individual stock picking. So what do? You just buy a low-cost S&P 500 index fund. So maybe at this point, I'll just share with you some of the low-cost S&P 500 index fund that could beat, not say could, that have beaten, right, the ARK ETF. So the first one that we talk about is VOO. The V, right, is actually managed by this company called Vanguard. Yeah, expense ratio, right, is 0.03. The second one is IVV. Same thing, expense ratio is 0.03. Yeah, these two were beaten ARK ETFs, hands down. The third one, right, is a SPLG. Yeah, so if you want, you can take a screenshot, take a photo or whatever, just write this down. Yeah, so remember, these 3, right, are ticker symbols, yeah, of a very low-cost S&P 500 index fund that is recommended by Warren Buffett. So I'm just going to pause here for a few seconds, right? Yeah, so that, for this session, even though we tell you some of the companies are quite dangerous, yeah, AI not performing well, even though it sounds very sexy, but at least there are 3 things you can seriously think it through, which are the low-cost S&P 500 index fund. Okay? Now, so over the long term, the S&P 500 index fund has given an annualized return of about 10% per year, yeah, which is considered quite good. Yeah, because the core inflation right now, I think, is about maybe about 5%. Yeah, so 10% more than 5%, right? So you can still beat inflation. But if you buy bonds, all this, I think it's going to be very difficult. Yeah. Now, in case some of you are thinking, wow, but 10%, okay, is good, but not good enough. You want 15, you want 20, you want 30, you want 10 times, 5 times. Then there is no other way out, because if you want to make more, you need to learn more. Yeah, there's no such thing as you make more money by knowing nothing. Yep. So what happened was, remember, in 2021, everybody's a genius. What you want is you want to invest in companies that can go through bad times, which is right now, bear market, right, and good times, which is the bull run. Now, but there are a couple of challenges that are being faced by people like me and you, retail investors. Now, the first challenge, right, is do you know where to search for investment opportunities? So, for example, right, if you relate back to what Hillary has shared, Hillary, okay, focus on Cathie Wood. Okay, Cathie Wood got this ARK fund. ARK funds got so many, so she zoom into one, and then she look at the subcomponents. Now, but remember, Hillary spent a lot of time doing this, but if you have a daytime job, I think it's quite challenging for you. Yeah, so she start from, Cathie Wood, yeah, or you can start from Buffett or whatever. So the question to ask is, do you know where to search for companies, especially good ones? And even if you have found them, for example, the 3 AI companies that Hillary has found, now even you found that, and then people say, oh, these 3 are very good. Do you know how to differentiate between a good one and a bad one? At least based on the numbers that we saw just now, right, the 3 AI companies, they are still losing money. Yeah, one more time, right, they are still losing money. The question is, would you sell your house, take the cash, and then pump into these 3 companies? I think unlikely, right? Yeah, if you buy, maybe you just buy as a lottery ticket. Yeah, so remember, you must have the skill to evaluate whether a company is good or bad. Then, assuming that you know. So when is the best entry price and when is the exit point? This is difficult. Yeah, this is difficult. If you have not attended our 4 days value investing program, this is almost impossible for a typical layman. Yeah, then the next one is AI. I think AI sounds sexy, but to me it's just too complex. Yeah. So in this specific industry, right, do you know the details? My background is in zoology. I don't think I can make it for AI company. So you realize that there are huge amount of obstacles any individual retail investors need to overcome before they press buy. Yeah. If they do not have answers to all this, they are simply gambling. So what happened was during the short recession in 2020 and also the bear market, right? Me together with a team of graduates, we decided to go to the universe, which is the US universe, to search for very good companies. And then subsequently, we came out with a name, right, for this assignment, for this project that we're doing. So we call it VIA Atlas. You know, Atlas is a map, right? Yeah. So we go to the US portion of this map, trying to search for good companies using value investing. Remember, it's not using guesswork. Yeah, guesswork. So we want to provide you with all these companies that we have, that we've done research for the past 3 years at your fingertips. Yeah. Yeah. So let me share with you the framework that we use. Yeah. So what happened is in year 2020, quite a substantial amount of our graduates have become a member of this project. They are like the founding members. Yeah, somewhere in April 2020. So when they became the founding member, right, we actually have a database of companies that we already found. Yeah. So that is during the recession. That was during the bear market. So they are able to take advantage of some of these companies. Yep. And then in addition, right, we also provide a summary reports because our analysis is really deep dive. It's like 40 minutes per company. And just now, Hillary is only scratching the tip, right, of the iceberg. So we also give them the slideshow. So ultimately, what we are trying to do over here, right, is number one, we want to save our members, especially the founding members, lots of time. Yeah, so number one. Number two, we don't want them to lose money, which is why it's important for us to focus on really good companies. Yeah, based on value investing philosophy, which has been around for the past 100 over years. Yeah, and then the third thing is, of course, we over time, right, we want the company to do well. And in the very beginning, we showed on video, and Peter Lynch said that the moment the companies do well, the share price will do well. Yeah, so these are the benefits of founding member. But of course, that is based on what we have already gathered. So moving forward, we want to follow up with them. So this is like a 1-year degree course, Yeah, 1-year degree course. So every month, yeah, we will deliver 2 companies. For example, January to all our members. February we deliver another 2, and then March we will deliver another 2. After we deliver a total of 6, right, we will have our inner circle meeting just purely for our members. And we will share updates of these 2 companies. Now, when I say 2 companies out of 6, is we are sharing like 1/3 of what we have discovered. And then if you are our VIA graduates, you know that we sell options, right? We don't trade options. We sell options. And then based on our gathering that we had actually it's just yesterday night, I share about 8 companies that we have sold options on. Yeah, and all these are through thorough research. And of course, you have a chance to do some Q&A and so on. Yeah, so this is 1 quarter. Then what do we do for next quarter? Same thing. We will, deliver 2 companies per month, and then we'll meet again. So Q2. Deliver 2 companies per month, we meet again. Deliver 2 companies per month, then we meet again. So if you look at this, it's a 1 year, right? Like a 1-year program. Yeah, so at the end of the day, what do you have? You have a huge amount of companies, like a buffet style, right, where you can select from. Remember, it's a 1-year program, 1-year program. And as of now, right, as we speak, what is the amount of companies that we have, right, that all of you can have access? Now, just to let you know that as of now, we have a total of 59 companies. That is a lot. Yeah. Versus 9, versus 29, versus 19. 59 companies. And because right now it's still a bear market, the war is still going on, and then US trying to poke the nose, right, of China, right, to provoke a war. So it's still bear market. So 78%, which is 46 companies out of these 59 companies, are still undervalued. So if you see these rows over here, the one that shaded in yellow, all these are huge amount of good companies, but it's really cheap, waiting for value investors like us to invest. And the best part is you can have instant access tonight to all these companies, which is our past 3 years of effort since 2020. Yeah, and who are our researchers that's doing all this work, right? These are the faces, of those people who put in the hard work. Maybe I just introduce 1 or 2. So Alice is one of our author and researcher, right? Yeah. So if you look at her title, her background is actually in accounting. So she's very good in looking at all the financial statements and so on. So I'm glad that Alice, being a very senior in the company, she's helping us to do research on good companies. And we have another researcher, is actually Dr. Betty Fan. Interestingly, her full-time job is really a researcher. And she has a PhD, I think, in chemistry, yeah, if I get it correctly. Yeah, so of course we have engineers, people from all walks of life. And the reason why we want to put all this together, because every single researcher or author has their own superpower. Yeah, so we need to put all these people together so that we form a team, like Avengers assembled, right? So we come together and then do all this work. So what framework do we use? We follow the VIA framework, which is search for the business, evaluate, and we only focus on good business. Yeah, buy it when it's undervalued, and before that, we need to know how to estimate intrinsic value, and of course, eventually form a portfolio. And if you are able to access all the companies that we've done tonight, far more superior than all the AI companies, what you need to do is you just need to click on this button over here, key in your username and password, and then once you log in, you'll be able to see all these menu bars on top. And then by clicking, for example, sectors, the 11 sectors will pop out. You can choose any sector that you like, and then all the sub-companies will pop out. And remember, all these companies are far more superior than the AI companies that Hillary has mentioned. Yeah, and of course, instead of sector, right, maybe you want to zoom in directly to those good and cheap companies. So you just move your mouse over here, click on it. There's a list of companies that's going to pop up. So remember, total we have 59 companies. 78% are still undervalued. And of course, the most interesting thing is yesterday we just had our gathering. If you want to access the recordings of a past gathering, what are the companies that we talk about, what are the companies that Cayden is personally interested in selling options, just click on this. You can access all our past gathering, remember, at your fingertips. And it's going to save you like months of your life. And of course, the best part is we're using value investing, yeah, which were primary intention is to protect your hard-earned money, and then yet we want to grow our money. Yeah, so yesterday's session is really exclusive, only for our founding members. So number one, every time when we meet, we talk about two companies update. Yeah, and then we also introduce any revised intrinsic value. You have a chance to talk with our authors. And of course, yesterday I personally shared about 8 option selling opportunities that could generate cash, at least for myself, right? And then you always have a chance to chit chat with me. Yeah, and the next mentoring session, because we've just done this, next mentoring session will be in June. So every quarter we meet. Yeah, and in the whole Singapore, we are the only one that is having this like a 1 year, project called VIA Alerts. Now, and of course, if you are not a graduate or if you are an old graduate, you've forgotten some of the things that we say, you can just click over here. Yep, here we have our pre-recorded training where you can revise all the value investing methods, right, that we train during the 4 days value investing program. So you see, it's all stored here. Yeah. Then, of course, if you want to access that so-called Excel file looking stocks, right, with all the undervalued companies, you can just click on here. Yeah, click on here. By the way, you can access it tonight. That's the best part. Yeah, so remember, tonight, right, if you want immediate access to all these companies tonight, and then you can, maybe this year you want to consider forming your portfolio, right? Yeah, I'm going to share with you how it's being done. So let's do a quick recap. Now, from today onwards, if you become our member, right, every year, every month, right, we're going to deliver 2. So 2 times 12, 24 companies. The next one, yeah, every quarter we're going to meet. Yeah, I'm going to share with you some of the options that I'm going to sell. We don't try options, options that I'm going to sell so that you can generate cash. And then yesterday we have one gentleman, his name is called Kelvin, right? He has been with us since 2020, since the day when the pandemic began. Just to let you know that his every year's cash flow, excluding capital gain, he specifically said to all a few hundred of our grads that he generated about 18%. 18% pure cash. And if he adds in, right, the capital gain, maybe about 35%. Yeah. But of course, there's also a bit of luck involved. Is because we started this project during the bear market, and he has the courage to take action during the bear market. Yeah. So right now, that's why you see this capital gain. And we remember right now we're still in the bear market. If we do nothing now, then we have nothing. Yeah. So this mentoring session is very important, where we do every quarter. And for those people who are very busy, especially for Kelvin, right? Kelvin is actually having 2 jobs. So he said one of the favorite thing that he liked is really the one-page executive summary, because it only takes him 5 seconds, right, to understand what the company is doing. And we provide all this, right, using just your fingertips. So if you look at all these values over here, I would estimate one whole year, right? Like a mini degree, the value is more than $16,000. And the best part is if you take some form of what one-to-one coaching or whatever companies are fanciful names, right? They are charging like 120,000, yeah, which is a bit ridiculous to me, right? Yeah. So here we are providing much greater value at a much discounted price. So instead of paying very huge tens of thousands of dollars for something like what we do in 1 year, right? Yeah, your investment is just a mere $888 for a 1 year. 1 year full support. Yeah, for full support, huh? But that's not the end, right? So today, if you join us, you have immediate access to all our database that we have done for the past 2 years. Yeah. So if you subscribe to one year, you get our past 2 years at absolutely zero cost. So remember, 888 for 1 whole year. 1 whole year. All the companies all done for you. We meet up every quarter and so on, right? And of course, if you are watching this, you're a subscriber, you are renewing for the 2nd year. For the 2nd year renewal, we even give a 17% off. So usually people will increase by 17%, but we reduce by 70%. Partly because you are supporting us. So we're giving back the reward, right, for being our staunch supporter. So just do a quick recap. This is a 1 year support from tonight onwards, from left and then going to the right. So it just become our member. Yeah, you have access to all this database, which is our past 2 years. Yeah, so 2 years plus 1 year moving forward. So 3 years, right, is 888, which is already 50% discount. So if I take this 8 divided by 3, right, so 1 year maybe is about 200 plus. Yeah, but 200 plus, the value that you get, you can make maybe 10 times more than 200 plus, right? Yeah, and 10 times is only 2,000 plus. So easily you can get your money back in a snap of a finger. Yeah, so these are the things that we provide you. So 1 plus backward 2, so total 3 years, right? So I will need my colleagues' help to just play a very short video, which is actually a testimonial given by our subscriber, and her name is called Julie Lok. So here you go.
My subscription fee, I get it back within 1 to 2 clicks. Okay, I'm Julie. I'm from VIA Graduate Batch 31 and I work in a healthcare company. The reason why I started to subscribe to the US case studies is because of time. I realized that we need a lot of time in terms of doing the research, the filter, the analysis. Sometimes it's very difficult and very tricky. And it's not just as simple as 1, 2, 3. If we have a team who can actually do a good job in doing all these things and monitoring them, why not? It's less than a proper like 10-course dinner or a dinner that me and my friend are going later. You know, it's like or lunch or high tea or whatever, and you have a peace of mind. Like you know that these are the value companies, and you know that this can be part of your portfolio. US case studies is not just about presenting the 1 to 24 studies, 2 studies a month, and then they will forget about it. If you realize that they actually go back to reanalyze some of the case studies that they have picked up before, and then review again, is the fundamentals still there? Are they still earning? Do they still have good management? What have they done for the past year? Have they met the criteria or the promise that they say that they're going to meet? Now that I've found out this value investing part can be part of my portfolio, right? Let's say 25%. I have the other 75% that I need to look into. But I know value investing is important. It's the fundamental, it's the base, right? But once I found out this time that I don't need to do or search the world, for the companies, which I know that a very dedicated and very good team will do that, I can actually use my time for other things. Other than venturing into other types of instruments and investing, I also have more time for my family. I do not want to sit there and search for things, rather than sitting down and looking at, what is the company to invest tonight. ROI that I gain from value investing and plus CFOS and the US case studies is about 15 to 20% per year. And it's like 1 to 2% per month. After subscribing to the US case studies, it's very structured. These are the companies that has been picked up and searched and researched and analyzed by a dedicated team. with all the knowledge that they have to make sure that it's really a value company. So after that, it took me only about like maybe half an hour to 1 hour. So these are all the benefits that I have because I don't have to worry. It's like a peace of mind. I don't have to worry about is the company good or not. I know that the US case studies or the company will be value company. But whether I want to invest in them because it's value company is my due diligence.
Okay, so ladies and gentlemen, welcome back. Now, if you want to take advantage of our 1-year program, which also includes our past 2 years, so it's like 3 years, So here we're talking about like a bachelor degree, right? So what you need to do is my colleague is going to post a link at the chat. Yeah, right now, I can already see the link. Now, in case you cannot see, right? If you're using the browser, you just need to refresh the browser or use your phone, close it, and then launch it again. And we have also pinned the post right on top. So you should be able to see something like https, home.viaatlas.com. And then if you've got any issue, you can always email us, right, at technical@mykinesis.com. So the link is already there. So what you need to do is if you want to gain our 1 year of support plus the 2 years, so total 3 years of support, what you need to do is just click on this link. Yeah, click on this link, right? And then if you look at my slide, I just need my colleague to put on the slide. Yeah, you should see all this information. As usual, just key in your name, email address, all the relevant information, you just fill it in. Now, so once you fill it in, you just need to submit. Now, once you submit, I think in just a couple of seconds, right, please check your inbox and at the same time check your spam box. Yeah, because you should be able to receive, because at the back end, right, we are doing some auto system, like something like AI, right? So eventually, the moment you submit, you should receive a username as well as the login. Yeah, and the moment you log in, you'll be able to see our past 2 years of companies, which is that 59 companies, and then 78% or 46 companies that are still undervalued. That means you can have the immediate access tonight. So the links are already there. Just click on it, fill up the information while I continue to speak, right? Now, the best part is the moment you become our member tonight, we're going to launch something new in the next maybe 4 to 5 months. Now, if you look at this screenshot over here, right, this is an improved version of our existing platform. Yeah, and the amazing thing, right, is other than the desktop version, it also comes with an app version, which also means that you can really invest at your fingertips anywhere that you like, anytime that you want. Yep, and the best part is for those people who become our member, right, you can have access to our desktop version of our platform as well as the mobile app in the future once we launch it at 0 cost. Yeah. Now, but of course, if you're not our member today, subsequently, if you decide to change your mind, you want to do this, when you download, right, you may have to pay for the app. So as of now, it's a guarantee, right, that having access to a mobile version of all the information that we have is actually 0. You don't have to pay for the app. Yeah. Just by clicking on the link over there, fill in all the relevant information for a 1 year plus the past 2 years, 3 years, right, of our research work for mere 888. That's much cheaper, right, than having a degree or MBA or some coaching program, which is a tens of thousands or 100,000. Yeah. Now, so this is the structure. Remember, once you become our member today, you have access to our database, which is 59 companies tonight. You have access it tonight. So we're going to save you a lot of time. As much as you can, we want to protect your capital using value investing methodology, and we also want to help to grow your capital. And then subsequently, every single month moving forward, we're going to deliver 2, and then we're going to meet every quarter. So this is the entire 1 year program, 1 year support. So remember, it's just a mere 888. Out 1 year. So that is really value for money. And of course, second year when you renew, we will further give you some loyalty rewards, which is at a 17% discounted price. So I'm done with my sharing. This is the last slide, which you can see here, registration, right? So I'm just going to pause here maybe for the next 10 minutes for you to click on the link and then fill up any information, right? Now, if you have any questions regarding what Hillary has presented, because she can also reply via the chat, right? Or our project, VIA Atlas, please feel free to type in your question in the chat below. Or if maybe for future YouTube live, if you have any interesting companies, whether it's AI or whatever, yeah, you can also type in the chat, and then we can seriously consider whether we want to talk about the companies, do some deep dive about those companies as well. So we are very open to suggestions and ideas that we can do research on. Yeah, so I'm going to pause it for a short while. I just need my colleague maybe to put a 10 minutes timer. Yeah. So ladies and gentlemen, any question here first? This is my last slide already. Yeah. Any question regarding? Yeah, Angeline, thanks. Yeah, you have always been around, Angeline. Thanks. Yeah. So tonight we have how many? 1, 2, 3, 4. We have 4 people who are supporting you, right? Yeah. Maybe later on I should take a photo of 4 of us. because nobody know who are the backend people. Only see me and Hillary. Yeah, so Angeline, by the way, Angeline is our member, subscriber for both our US case study as well as the Singapore case study. Wendy, you should be our subscriber also, right? Wendy. Yeah, Wendy, you also like Angeline. No? Every time I see your name, very good. So thanks for supporting us. Now, for those people, before you go off, if you don't mind, right? You know the YouTube got this thumbs up. Can you just press the thumbs up? Yeah. Is this US case study open to non-VIA grads? Yeah, it's open to non-VIA grads. Yeah, as long as you're interested in investing. Yeah, so grads, non-grads is fine. By the way, Wendy, are you our grad? Yeah, because from the name, you appear to be our grad. Yeah, so it's open to everyone, every human. As long as you don't want to lose money, you want the capital to be protected, and over time, you want to save a lot of time. Analysis of company is it's not easy. It's not easy. It's a tough job. And Hillary is doing this full time. Yeah, you are a grad, huh? Yeah, so you understand, huh? The effort. Yeah, I think the most effort is not the numbers. The most effort is trying to figure out what they do and whether do they have a competitive advantage. Well, this one takes some time. Yep, there are still about 50 plus people. Any other question that you want to ask? Remember, I'm just buying you time, right, to click on the link. Let me just go back over here. Yeah, fill up the relevant information so that I'll see you in our next inner circle meeting, right, which is just 3 months from now. Yeah, any other questions? So we have about maybe 7 minutes more. Yeah. So I'll just chit-chat with you. You know, every month, right, we are doing this YouTube live, this deep dive, I think about 3 times on average, 3 times per month. And then it appears to be like quite simple, right? You know, Hillary, like, not talk about 3 companies, but actually a lot of work, And the reason being a lot of work because as much as we can, we want to state the facts. You know, ARK ETF, you can always validate what we say by going to ARK ETF and check whether is it true. Especially expense ratio, which is highly factual, right? Like 0.75, VOO Vanguard, you know, 0.03. So we have to be very careful what we say. As much as we can, we want to be very scientific. And I think luckily Hillary also quite scientific because her background is in chemistry, right? My background is in zoology, so biology. So both of us are science grads, so we are very scientific. Yeah, so you realize that our YouTube live are, you know, a bit scientific, right? Or versus, please buy Tesla, please buy this company, buy that, because I feel that is good and so on and so. So as much as we can, we want to provide facts. Yeah. Wendy joined the YouTube deep dive when she haven't attended the 4 days. Yeah, I think so, you know. So I think Wendy has already finished her training, right? Yeah, because you say you're already a grad. Oh, yeah. Months ago, I think Wendy has not attended our 4 day yet. And then right now you're graduated. Very good, congratulations. Right? So we have about 40 plus people. We have about maybe 5 minutes left. Okay, so there's a 越南大美女, right? After subscription, do we use Moomoo platform to invest or any other platform VIA recommends? You can use any platform that you have. Now, let me just highlight to you is if you use platform like Moomoo or Tiger, yeah, this is just opinion. This may not be a fact. My opinion is, remember, these 2 companies are quite new. Yeah, what will happen in the future, I have no idea. So I let you decide. But of course, they want to compete with like Philly Securities and all this. Oh, you open an account, I'm going to give you a free Apple stock. Yeah, so you can use any platform, right, that you feel comfortable. So I cannot impose this on you because this is your personal choice. Personal choice. So you can use any platform that you like. So that is to reply 越南大美女. You don't have to use the stuff that we recommend. But I do not mind sharing with you what I use. Yeah. Now, if your capital is not very big, like a few thousand, maybe less than 10,000, right? Now, the transaction fee matters. I'm not familiar with the transaction fee of Mumu or Tiger. Yeah, but the one that I use, for example, I use two US brokerage firm, which has a physical office in Singapore. That is TD Ameritrade. They have zero transaction fee when you buy and sell stocks. And then if you want to sell options, their transaction fee is also very low. So number one, this is what I use. Whether you use or not, I let you decide, but I'm sharing with you my experience. Then the second US brokerage firm that I have is with Interactive Brokers. Yeah, so these two are US company, physical presence in Singapore, and because they have a physical presence, they need to be licensed by MS. So I'm using these two. Yeah, using these two. Then for Singapore companies, I'm using DBS Vickers Online. I'm using Philips Securities. And for Philips Securities, I got multiple accounts. Yep. So Singapore company, Singapore brokerage firm, US company, US brokerage firm, so that I save on the monthly admin fee and also the transaction fee. Yeah. So 越南大美女, did I answer your question? Yeah. So I'm sharing with you my thoughts. Okay. But remember, I do not have Mumu or Tiger. Okay. Great question. Any other question? We have maybe about 3 minutes. So remember, the most important thing, maybe I need my colleague to post the link again because the question. The link went missing, it's right on top. Yeah, so click on the link. Remember, fill up all this information. Then, you are in our group, right? So every 3 quarters when we meet, you can ask questions like this, platform, what I use, and so on, versus you trying to figure out yourself. Yeah, by the way, trying to figure out a company by yourself is like jumping inside the ocean trying to find a needle. Yeah, or walking into the forest. Yeah, which is highly dense, like Amazon forest, trying to go out. That is very difficult. It's deadly, in fact. Yeah, deadly. Yeah, so 越南大美女 thank is okay. It's just my experience, so no problem. 举手之劳, very simple thing. Yeah. So again, my colleague has posted a link. If you, for example, if you become a member, you already fill out all the information, you will submit, and then for some strange reason, right, which is unlikely, but for some strange reason, you don't have the username, and then the password, spam box also don't have, don't worry. You just email to technical@mykinesis.com. My colleague, right, start works at 10 a.m. tomorrow. So first thing when she comes, she will settle all this login issue. So don't worry. Yeah, she can even call you and make sure that you can log in. Yeah, so remember, let me just go back to here, right, very important. Number one, you're going to have your app in the next couple of months. And then at the end of the day, we want to support you for 1 whole year. Yeah, plus the past 2 years of our hard work. So 1 plus 2. So it's 3 years, like a degree course. All for, this is the value, right, that you're going to get. All for a mere 888. It's like lay long, right, you cannot find. Yeah, because we want you to be a value investor. Okay, so about 1 minute plus left. Any other question you want to ask? Interestingly, we still have about 40 plus people who are watching this, right? Yeah. So later on, before I exit, if you don't mind, can you just help us do a thumbs up? Thumbs up. Okay, right now I see 15 thumbs up. Not bad. 15. One of them is me. Okay, any other question that you want to ask? It can be administrative question like what Yue Nan Tabini has asked, right? Okay, less than a minute already. The links are there. I think for the video, right, we will leave the link at the description. Yeah. By the way, if you're non-grads, please feel free to join us. I mean, 1 year, 888. You'll know whether we have done a good job. And then, by the way, we have a huge number of subscribers that has been with us since year 2020. That really shows something. Okay, maybe about 30 plus seconds coming. Any other things that you want to ask? You can leave your question right in the chat before we knock off for the evening. Yeah, you can see in my slides over here. Yeah, and I can show you another version, right? Yeah, so these are the things that we're going to provide. Yeah. These are more wordly. I think the visual one is better. So you can see the structure. Yeah, Julie, thanks again. We have been like using your testimonial. Yeah. So we'll be seeing soon in our Kelong dinner. Yeah, in April. So thanks, Julie. Appreciate your support. Yeah. So I think thumbs up already, huh? Is it? A few more seconds, right? Done already, huh? So we're going to leave. I just let my colleague to post the link one more time before we knock off for the evening, right? Okay, the link, and she will also post the email address again. Yeah. So, ladies and gentlemen, remember the session that you're watching tonight is presented by Hilary, which is my colleague, and as well as myself. And both of us represent VIA, and VIA stands for Value Investing Academy. Oh, there's a question. Subscribed in 2021 but didn't continue in 2022. A subscription would be, I mean, if you subscribe in 2021 but you so-called discontinue, will be the amount that you see, which is today's amount, the AA8. Yeah, because you discontinue. If you have renewed, will be become 700 plus. But the difference, I think, is maybe about $100. You can make this money back anytime. Yeah. So stay with us. Stay with us. Remember, right now it's still the bear market, right? Yeah. It's important to us. So let's come back to here. Remember, VIA represents Value Investing Academy, and our mission, right, is we care. The word care is very important. We care to make you a better investor. So thanks for joining us. If you have any question, continue to post it. We can definitely reply. Remember, the link is there. Click on the link, fill out the information, and shall see you in just a few months' time. Remember, you have immediate access to our 2 years of effort. So you have not time any. Please continue to subscribe. Even if you discontinue, just click on the link again. Do it one more time. Stay with us, right? And you're going to get many times your money back. Okay, so with that, have a good evening, and I shall see you soon in our next YouTube Live. See you. Okay, bye-bye.